Good morning, everyone. John Miller, propanebuzz.com here with your weekly EIA inventory breakdown and then discussion of other notes and anecdotes. But first, before we go, I want to thank our sponsor, EDP, that is Energy Distribution Partners. And there comes a time, if you're a propane retail business owner, that you may consider selling your business. And if you ever get to that point in time, do yourself a favor and call Energy Distribution Partners. Certainly make that as one of your calls to find a valuation for your business when the time comes. EDP has been growing both organically as well through acquisitions. In recent times, I've known the leaders of this company since 1996. So these are people that I know how they operate. One of them used to employ me when I first got into the industry in 1996. Integrity, loyalty, those are big buzzwords for Energy Distribution Partners. You don't have to take my word for it. As you can see here, you can go to their website and click on testimonials and see some propane retailers just like you who have chosen to place their business, their legacy in the hands of EDP and reap those rewards. So give them a visit if you're thinking about it. Let's look at this week's EIA report. This morning I sent out a note to subscribers saying that I thought we'd see things coming around 1.8 million barrels of a build. And you look at this week's number, 1.8 million barrels was the build. That puts us about 1.3 million barrels behind last year's pace. I felt 1.8. I wasn't projecting numbers, I'll be honest with you. I wasn't sitting here carving things up and said, oh, it's going to get to 1.8. I thought 1.8 would be a decent number to where when you look at the 1.7 build we had 3 weeks ago, or 2 weeks ago rather, and then you looked at the 800,000 barrel draw that we had last week, I felt we probably need to be around 1.8 or higher as far as a build this week. Otherwise, the markets were really going to look at things bullishly. 1.8 isn't huge. It's not small. I think a year ago this time we had around a 1.7, 1.8 build. So this is definitely in the range. And this is in the range, if we kept up at this particular pace, that we'd see propane inventories in the 85 to 90 million barrel range by the time we get to the end of September, which I think is what the market would like to see. So that's a comfortable number. I don't think it's necessarily bearish. I don't think it's bullish. I think we continue to ride the back of crude oil as we have been for a long time. So let's look at that really quick. Crude oil right here built 3.8 million barrels. It was a little bit less than the APIs from last night that had an over 5 million barrel build. But this is summer demand season, summer driving season, gasoline consumption season. See if I can see the motor gasoline number here, 2.5 draw. Crude oil's probably, you would the expectation from the marketplace, I think, was a draw of around 2.5 million barrels yesterday, and we're getting the build here. So really, there's just a lot of bearishness right now in crude oil. Now, from one day to the next, let me see if I can pull up a funny headline. Here we go. I'm going to drag this over here. So this is from yesterday. I went to Bloomberg, looked at numbers, and I just looked over here in this side of things. This was from the Monday headline. Oil rises most in a month amid heightened worldwide supply risks. Meanwhile, one day later, oil posts largest monthly loss since 2016 amid oversupply risks. Supply risks cited twice, back-to-back days, but in two entirely different ways. Drives me crazy. Anyway, these are just all indications of a skittish market. We'll get more to that in a second. Let's go down and look at a little bit of the internals of this report really quickly. And let's look at exports. Propane exports last week were at 1.238 million barrels. It's probably one of the three highest weekly export totals for propane in history. That was on top of last week's 1.095. So this 1.238 number, 1.238 million barrels per day, one of the three highest that we've ever seen. I'm convinced of that. I don't have the other two in my mind right now, but I know from doing this every day for the last 5 years, looking at these numbers every week when these come out, keeping a spreadsheet that I'll share with you here momentarily, these are the highest numbers that we've seen. Demand, propane demand, this it's product supplied, but it's propane demand. This is always the fuzzy number to me. It's just, okay, whatever's left over, we got to make our math out. Okay, we had exports here, we know inventories here. This number is just like a throwaway. 558,000 barrels per day versus 1.093 million barrels per day a week ago. See, it's a fuzzy number. Propane production, I'm guessing, is probably about 1.9.5. Yeah, 1.937. So those numbers, that's how you arrive at this. Let's go over to a sheet that I keep. So this is this week's 1.238 million. I actually did look at these numbers just really quickly ahead of time this week before we start talking. And I did have the expectation of 1.9.5. So I wasn't trying to just make myself seem smart there. Because I wanted to share this spreadsheet with you. So 1.238 million, you can see that's higher than any other inventory build this year. Let's go back and look at some history. This is last year. Here's the dates last year. I'm looking for big numbers, 1.038. There's some ones there. We saw 1.254, so that's a little bit bigger. And then the year before that, there was 1.313, which I think is the biggest. That was in December of that year. So yes, that is the third largest build, or third largest export number, weekly export number in history. So here's the build this week, inventory level, year-over-year gap. So I don't know. I don't think that crude oil or propane inventories right now are spooking folks at all. Looking over here at any deals that have been done this morning, it's the first trading day of August. There was 5,000 barrels traded in Conway this morning, right off the bat, at 70.5 cents. Now, yesterday's closing averages, let me go over here to that. Yesterday's closing average was 75.50, as you can see here in Conway. 70.5 traded early this morning in Conway. That's a huge drop. I throw it out as an outlier. You see deals getting done right off in the mornings in Conway. It's people out setting prices for daily averages. But there's only been that 5,000 barrel deal that's traded today. That's been it. No other activity in Conway. Mont Bellevue, a little bit of activity. 40,000 barrels have traded. 94.5 was the last deal done. That's also the high for the day, the low of the day at 94 cents. So you can see here, that's about a penny and a half, 2 cents lower than yesterday's closing average. So the trajectory is lower, as you would see. And the reason, I think the reason for that, and I'm going to pull this up here real quick, is crude oil. Sorry, I'm doing this on the fly. Crude oil now down $1.02 on the day, 67.74. If I can go back on my browser to see if it opens up, and it will, you can see where crude yesterday closed at 68.76, so we're down about $1 there. Jittery markets, very uncomfortable markets. You saw the little headline thing that I showed you earlier today. We have a lot of brinksmanship negotiation going on in the world geopolitical arena. President Trump yesterday morning, or the Trump administration getting word out that the United States government might be open to a new dialogue with the Chinese officials to potentially circumvent an impending trade war and trade tariffs. That was yesterday morning. And the market reacted, hey, that's great, that's good news. That's actually would be bearish for energy if you don't limit trade, if you keep trade open. Or not, that's bullish rather. Sorry, I get my bears and bulls mixed up. So if trade is unhindered, that's a good thing for the economy. But then yesterday afternoon, you saw officials, like right here, Trump advisors urge raising additional Chinese tariffs to 25%. Same day, morning and afternoon, and this is an entirely bearish factor when you're talking about closing trade, restricting trade, barriers to trade. Economic slowdown. Economic slowdown leads to lower energy consumption, etc., etc., etc. I mean, we're talking about just huge boomerangs daily, intraday. here comes a bullish, here comes a bearish. You saw these headlines again. I mean, how do you get things like this where one day the same thing, worldwide supply risks, means something bullish, but the next day it means something bearish? That's insane. It's irrational. It's illogical, but that's where the markets are right now. And what you get from that, you get volatility. You get pretty significant volatility, as a matter of fact. So again, that's why cost averaging can save the day. This is where things closed yesterday. A financial paper trading trajectory here, which this is where your propane winter fixed price contracts are set from, is the financial paper trading side of things. Obviously, it was a down day yesterday. This stuff highlighted in purple, this is fourth quarter 2019, first quarter 2020. These are the numbers that I send these to my clients every day. These are the numbers that you focus in on, because typically, in my experience, it's 15 years wholesaling propane, starting in 1996, taking a little break from 2003 to 13 while I started a couple of other businesses and coming back into the energy industry and propane wholesale in 2013. The farther out you can look to buy, you can sometimes find pretty good values out there. That's a good place to begin cost averaging, is further out the curve and beginning that process there, because the markets are not very liquid out there, and you can sometimes, I would say, take advantage of the traders, because if they agree to, if the wholesale company agrees to sell you gas, you're not taking advantage of them. Just not going on out there. If something fits you and fits, like this, say this Conway number, for first quarter 20, around 70 cents. If you can get that like on a swap or something like that for 71, 72, you know what your pipeline tariff is, you know what your freight is from that tariff into your office, and that comes into you, say, if you're in the middle of Iowa, 9, 12, you're looking at 85 cents, 86 cents at the terminal or close to near delivered in for you. So you know if that works for you wherever you are. These are the kind of things to eyeball out there. So these numbers, I think, are getting in the attractive range. Lastly for you, wrote yesterday to subscribers about the low solar conditions that are taking place right now on the planet. I think there's a formation of a sunspot going on today, but we were looking at 33, 34 consecutive days without sunspots. And you're talking about one of the longest stretches without sunspots in recorded history that we just experienced, which goes in line to this low solar, not even really theory, but the low solar minimum cycle that we're in right now. And data shows that the low solar, the less solar activity there is, that has a chance to get you into a decent winter outlook. Michael Clark and I from BAMWX.com, we're going to talk about this probably next week now, because he wants to wait to see more seasonal model data come in than just the Canadian that came in last night. You have the European seasonal data that comes out on August 5th. So Michael and I will probably talk about that next week, probably Wednesday or Thursday of next week. But this is a chart that I put together several years ago. I need to update it to the winter of 17-18. These numbers here represent, these numbers, all these numbers you see in here, are combined heating degree day totals for January and February of the given year listed over here. So for instance, 2000, this would be the winter of 99-2000, but these numbers represent combined January and February heating degree day totals for those years. And if you can get your video right now on a full screen, you can probably get a pretty good reading of these things. And over here, the weather pattern, which is, ENSO, was it El Nino year? Was it a La Nina year? Was it neither, a La Nada? Was it a weak to a strong or a super? One of those things that are listed. And one of the analogs that Michael Clark and his team at BAMWX.com, who are our meteorological partners, and if you subscribe to Propane Buzz, every single day you get their 2-week extended forecast. Right now, talking a lot about heat and precipitation for the ag belt. But in about a month and a half to 2 months from now, those daily discussions are going to be on temperatures and cold front outlooks and winter storm outlooks, things that impact our businesses. You're going to get that every single day just by being a subscriber to Propane Buzz. And you can see in the link below this video, as well as the email that came with it, the link to give us a free trial, 7-day free trial. I'm not asking for your credit card, not taking any information other than your name, your phone number, your business, and your email address. That's it, and I'll add you in. So, what do you have to lose? Nothing. So 2009-2010 was a low solar year. And that is one of the analog years that Michael Clark and his team at BAMWX.com are kind of focusing in on right now. So 2009-2010 would be 2010 on this line. And that was an El Nino year. It was a strong El Nino. Expectations are for an El Nino to develop, and probably a weaker El Nino, a Modokai El Nino, which is more central based as opposed to, off the western coast of South America, which is a good thing for us. I've got videos on that you can go back and see as well. But the green shading here, I probably should have had it shaded blue, but green means good. Green means, hey, these heating degree day totals are higher than the average. So, Columbus, Ohio, Indianapolis, Pittsburgh, Des Moines, Kansas City, Minneapolis, Buffalo, St. Louis, Philadelphia even, good. Portland, Maine, not so good. West Springfield, Massachusetts, not so good. Boston, roughly average. Raleigh, North Carolina, good. Very good. The darker shading means it's one of the colder years of the 20-some that are sampled here. Birmingham, Alabama, Atlanta, these are all above norms. These are all good. Chicago, in the range of norm. Dallas, Texas. Portland, Washington, not so good. Right, and then Albuquerque, good. Now, I'm not saying that we're going to see conditions replicate to what we're seeing in 2010, and there were also some other low solar years that we'll talk about when Michael Clark and I visit, and we'll revisit this map. But again, the early indications and early climate drivers, which really impact our industry and have the potential to make winter cold, normal, or warmer than normal, what have you, they're favoring a colder than normal winter at this distant juncture from winter. And I'm so glad that Michael Clark and his team from BAMWX.com are aligned with Propane Buzz, and that we're going to be working together, and I can provide those benefits to the propane industry at very, very minimal cost. As always, thank you for watching these videos, and we'll be talking to you very soon.